Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. The 10-year treasury rate continues to climb, now almost double the levels it was just 6 months ago. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss what that means for inflation, rates, stimulus, as well as a COVID-19 update. Phil, let's take a look at your first couple of charts. Why are investors so concerned about the 10-year, and why is the move that we've seen so meaningful?
I mean, the move's pretty big. Like you said, it's doubled in 6 months. And the reason that we're looking at the 10-year is the Fed has said they're going to keep rates low for as long as they possibly can. And if you look at the yield curve, which is showing rates at different maturities out the spectrum, you can see for the next year, the whole market expects rates to be basically zero. But once we get past the second or third year out, the market is definitely starting to move rates up. And that means that there's an expectation that rates will start to go up on the short duration as well. So why would rates be going up? Probably because the Fed wants to normalize rates, get them back so the interest rate you earn on a bond is back above the rate of inflation. So people with bond savings aren't going backwards. And you remember, it was just a year ago, COVID, where the Fed would just got to a positive real interest rate, where the interest rates were just above the rate of inflation. You can see that in the blue line in the second chart. Where we are now, rates are really low. We kind of know that they have to go back up, whether there's real inflation or not. If there is real inflation, then rates will go up even more. And we've talked about valuations in the market before. With rates low, the valuations are supported. If rates go up, the valuations are going to be under a bit of stress, unless the inflation also works itself through earnings going up by the same amount.
So Phil, the obvious question is, what does this mean as it relates to inflation and stimulus? Do we necessarily need that large of a stimulus package? Would it almost make the economy overheat?
Yeah, I mean, that's one of the discussions that's getting really interesting right now, is you're seeing a lot of economists that are saying 1.9 trillion at the end of coronavirus is just too much, and we are running the risk of overheating the market. And there's a couple of data points that kind of support that. If you look at the some of the inflation numbers that have come out recently, even today's retail numbers were off the charts strong. So the next round of stimulus checks are already in people's pockets. People are spending it on some big ticket items like furniture and electronics. You can see in commodity prices, we've talked about that before, and in just producer prices generally, the costs are starting to go up. And so if the services sector also starts to see a pickup in demand, we could see prices on that sector rising as well, and that will cause inflation to boost. And so inflation going up means rates probably have to go up to catch up. That's why we're watching for inflation so carefully.
And turning to COVID-19, the U.S. has secured additional vaccine doses, which will allow 300 million Americans to be inoculated now by the end of July. That's a good thing to see this kind of acceleration.
Exactly. I mean, it wasn't that long ago where people were thinking maybe it'd be next year that we started to get the whole population inoculated. So that basically brings forward the return to normal. It brings forward all of these stimulus checks and savings being spent on services. Some of the entertainment industry, which is still 30 to 40% underemployed, coming in and actually getting their jobs back. So a huge boost to employment, huge boost to the economy if the services sector picks back up. And with the rate that vaccines are going now, we're pretty consistently seeing an increase. We're getting close to 2 million vaccines a day. And we're also seeing a really dramatic drop in new COVID cases and hospitalizations, which is great, just because of the extra measures that we've started to take. Mask wearing, social distancing, and now that we're away from the holiday season, it seems like people are actually behaving a little bit better with respect to how COVID spreads. So the risk is that some of these variants that people are talking about start to take hold before the vaccines get through the system, or that the vaccines don't work on them and we have a whole nother COVID again. But that's worth watching. But at the moment, there's not a lot of evidence that it's happening.
Yeah, that is good news for sure. I feel like this is the first really positive report that we've had since covering this for nearly a year. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.